every leading business figure is predicting. And a correction would be a 15 to 20% drop. They're the ones that are most likely to crash. The first time this happened that really shook world capitalism was 1929, literally a century ago. We are now at the end of the American century. We have seen in recent years that a very small number of companies, they're actually called the Magnificent Seven in the stock market. You know, companies like Apple and Amazon, and a tiny number have been lifting the overall averages because the larger, broader stock market has not been in good shape for quite a while. And that serves the argument I've tried to make in recent years, that what we are witnessing is a historic decline of the American empire and of the American capitalist system. And that's reflected in the mediocre performance of the stock market the minute you remove the bubblers who are around the latest technology. If you put all that together, then the corrections that almost every leading business figure is predicting is absolutely likely to happen. And a correction would be a 15 to 20% drop in the value of stocks in the stock market, with focus on the Magnificent Seven, because they're the ones that are most likely to crash. And if that happens, and it may already be happening literally as we speak, if that happens, then the great question will always be the same. Always has been the same for the last century. Will any of these every 4 to 7 years economy downturns, stock market downturns, will it leach into the broader economy and take the whole thing down with it? That was, look, the first time this happened that really shook world capitalism was 1929. Literally a century ago. The stock market crashed October of that year, 1929, and it took 11 years to recover. And it only recovered because we went into war and put everybody back to work. The private capitalist system was unable to do it, even with the assistance of the New Deal. So we know how a stock market downturn can lead us into real bad economic times. And that was at the beginning of what we call the American century. We are now at the end of the American century, and that makes people who are historically aware realize that each of the downturns of a market now, with or without a bubble, could once again go back into the broader economy, because we don't have the longer-term historical upswing that was there, even though we didn't know it, in 1929. We do know that we're not zooming. Zooming is what China and the BRICS are doing, not what we are doing. And that means we have to be much more worried. And of course, with a government like Mr. Trump's, which is always cheerleading, there is no space to face that risk and to think about what might have to be done to deal with it. Lowering interest rates 1 or 2 points is way too little and way too late if we're in that situation.
You know, maybe 4 years ago, Google was spending less than $30 billion per year. This year, that number is going to be over $90 billion. And if you collectively add what all the companies are doing, we have well over $1 trillion of investment going in building the infrastructure for this moment.
The whole of this country and the whole of the world right now is in a bubble.
You see real demand, and we are constrained in our ability to serve that demand. So, and given the potential of this technology, the excitement is very rational. It's also true when we go through these investment cycles, there are moments we overshoot, right, collectively as an industry. We can look back at the internet right now. There was clearly a lot of excess investment, but none of us would question whether the internet was profound or did it drive a lot of impact. It's fundamentally changed how we work digitally as a society. I expect AI to be the same. So I think it's both rational, and there are elements of irrationality through a moment like this. No company is going to be immune, including us. If you overinvest, we'll have to work through that phase.
He says, in the past, it's been thus and so. We've had bursts of technology, and yes, they've been attended by some irrational moments of exuberance and excess investment, but it's always worked out in the long run. I mean, this is a stunning remark. That gives me no confidence at all, since I know that because something happened in the past, it not only is there no guarantee that it will happen again in the present or the future, but it leads you to ask the question, is the past, when it worked out okay, with us again today? That's why I did the history. We were in an expansion mode in the 1929s. I want to remind people, World War I had wrecked all of the other capitalist countries. They had been engaged in the worst war the world has ever seen. Europe, Japan, China, Russia, decimated, not the United States, which suffered much, much less comparably to them. So we were now emerging. Secondly, the global empires, the great British, French, German, Dutch, and other empires were all in a declining phase. The United States wasn't burdened with an empire. It had Latin America, Monroe Doctrine, our playground, but we weren't responsible for what went on in these countries. They were nominally independent, a very different situation. We were growing. We were coming into what came to be known as the American century. We are not anything like that now. Every day we learn about a new way that the People's Republic of China is outmaneuvering us competitively, this way, that way, this product, that product. It's a completely different situation. And therefore, we don't have the buoyancy, we don't have the support from below of a historical trend. Mr. Pinchai doesn't say a word about that. It's as if the larger context were equivalent, so we can rely on the same outcome to the bubble this time that we had the last time. Suppose I told you that only the buoyancy of the United States in the world economy got us through the bubble last time. Then I would have to conclude that lacking that buoyancy now, being in fact in a downward phase in the longer sweep of economic development, we are in real danger that a bubble burst will do all of the scary things we know it can do. I could go further. I could say, look, the bubble that burst in 1929 did lead us into one of the greatest depressions, the greatest, that world capitalism has had. 29 to 40, 29 to 1941. Do we really want to work our way through the way they did? That's not a good idea, Or are we looking at a war in Venezuela to do for us what the World War II did in getting us out? Are we really want to go there? He ignores all of that. He looks at it only as a question of an investment that we can survive. Let me take another tack because it's even more important. Let's suppose he's right. Let's suppose that the investments, there'll be some excesses, but they'll work their way out, and we will see all of industry affected by AI in the way that we are seeing. Well, in my judgment, for the working class, this is a disaster. This is not a successful emergence from a bad situation. No, this is a bad situation becoming much worse, and I'll tell you why. The profit without which AI can't succeed If AI is to succeed, it has to be profitable. That's why they're pouring that much money into it, in the hope that it will be profitable. Well, what does that mean? Basically, it means that the employer will be able to purchase AI and to install it in the factory or the office or the store where he's an employer. And why is that attractive? Well, let's take a simple example. We've done this once before. Let's assume the AI makes workers doubly productive. Instead of processing 200 pieces of paper at your desk, you can process 400 pieces or something like that. Double, just to make the arithmetic simple. Then the capitalist says, oh, great, I'll buy this AI equipment, the software that gives me that capability, and I'll tell half my workers, don't come back Monday. You're fired. I don't need you because with AI, the remaining half can do exactly what we were doing before. I will hire half the worker, fire half of them, produce the same output I did before. Half the workers plus AI is sufficient now. Sell it at the same price, earn the same revenue I did before, but now comes the exciting difference. With the same revenue I've got before, I have half the workers to pay. The other half of the wages and salaries for those 50% of my workers, I keep. Whoa, I am happy. My profit has gone up. I am very successful. Wait a minute. All of that is true. The capitalist has profited. Pinchai's dream has been realized. The payoff of investing in AI has happened because every little producer and medium-level producer, factory, office, store has bought the AI and installed it. But half of our labor force has been fired. Nobody is responsible in our capitalism for that. The employer has no responsibility. You're fired. I don't even want to see you again. I don't care what happens to you, and I have no obligation to help you or responsibility. You go off and deal with your spouse and your children and your community as best you can. Well, is there some guarantee that these people will be institutionally taken care of? Absolutely not. I mean, we live in a society which is busily taking SNAP support, food stamps, away from millions of people. Not a good situation to dump large numbers of unemployed people as you install. So this lovely story, you can see Sundar Pichai, he lives in the world of investments and profits, and none of that is his concern. None of the history is his concern. You know what you get when you talk to people like that? You're talking to a cheerleader whose job is hooked up with saying what is necessary so people will buy what he's investing in. In Wall Street, it's called talking your book. It is a phrase used when you have someone on a TV show who all that he or she is doing is promoting whatever they're invested in under the guise of commentary or advice. That's why it's never good to listen to those people, because whether they're smart or not, or whether they're insightful or not, really is beside the point, because that's not what they're there for, to be smart. They're there to promote. And that's what you got here. You got promotion. And the irony is, that's not what this bubble needs. It needs people to say, slow down, wait, what about the context? Nor would it be, last point, it would not be the first time in history that a gung-ho cheerleading march into the future produces a catastrophe, because you didn't understand the constraints, the limits, and the secondary effects of what you were doing, and it comes back and bites you right in the rear end in a way that hurts.